am mining investor and editor of Resource Stock Digest, Gerardo Dalio, here with my partner, Mr. Nick Hodge, who is also an investor and the publisher of Daily Profit Cycle. This is the 313th episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk markets. We're going to talk what we're looking at in those markets, where we're allocating capital, some of the crazy you-know-what that's going on all around us, and anything else that comes to mind. Before we get to it, Mr. Hodge, how goes you and your beautiful family, sir?
We are wonderful, Gerardo. Nothing major to report. Have an auction coming up this weekend for the kids' school, which your company sponsored, Digest Publishing. So we got a table there. That'll be nice. But nothing too much else going on.
Our company, Nick. Our company.
Yeah, thank you.
We are a team after all. Good stuff.
How are you, Gerardo?
I am well. I promised the audience I would try to look more serious the next several times that they saw me. And so this is me trying to deliver on my promise here. I shared the story with you all off air because you were asking me if my glasses were real. And I'm sure lots of people are wondering, well, is he just doing this to be his usual clownish self, or is he actually wearing glasses now? So here's my story that I shared with Nick about 5 minutes ago. A couple of months ago, I wake up like I always do, thank God, right? And first thing I do is I look at the market. I look at the overnight market. I look at any news releases, pre-market, see where things are looking, look at the bond rates, look at all that. And I started noticing like the stock tickers, right? I would pick up my phone and the stock tickers would be a little blurry. And I thought, well, man, maybe we had too many vodka sodas or one too many glasses of wine last night. Just kind of ignored it. But it kept continuing and it kept happening. And finally, I found myself in a restaurant one day and I got a menu with tiny print and I'm doing this. I'm like, what the, you know what, right? I'm trying to keep it PG in this early portion of it. So bottom line is I have near-term vision that is a little blurry if I'm looking at stock quotes this close up. And so got myself a pair of glasses and, now we're out here looking maybe a little bit smarter. I don't know. But yeah, they work. So I figured I'd wear them for a little bit and, try to come through on my promise to look a little bit more serious with my morning routine skip from the other week.
Well, neither you nor I are getting any younger, Gerardo, and time marches on, as they say. So hopefully that helps you with your blurry vision. And I report back, have a couple of vodka sodas and see if they help you with that.
Aye, Captain. Aye, Captain. Let's get to it. Another one of those weeks, right? We had we live in interesting times, right? That goes without saying. Let me take these because I'm not really used to it.
It's a fourth turning, Gerardo.
Fourth turning. So there
Ray Dalio was on 60 Minutes, basically laying out what a fourth turning was on 60 Minutes over the weekend, and
he did a beautiful job. He did a beautiful job, and if we're being honest, Jerome Powell, who I don't give a lot of credit to, actually had a press conference yesterday where he kind of echoed the sentiments. He did it in the most, I think, stoic way that he could because he is, who he is. But he basically echoed Ray Dalio's sentiments. If anybody hasn't checked out that 60-minute interview from Ray Dalio, I highly encourage you to go check it out. But it was such a wonky week that the CIA declassified a report from 1982 that outlined how UFOs turned 20 Russian soldiers to stone. And it barely got like a mention, right? 2025 bingo card is lit, everybody. It is a show out here, man.
It's been crazy. I mean, to be clear, the report said that people said that aliens turned people into stone, not that aliens turned people into stone. But yes, the CIA did declassify that report. And, you only saw it from the tabloid rags. The mainstream rags have bigger fish to fry. We're approaching 300% tariffs on China, Gerardo.
And look, this has real world consequences, obviously, right? I mean, I was having dinner with our oldest son yesterday. He's he's going to be 27 here soon.
It's wild.
Speaking of getting older, hopefully we get some wisdom coming with these years, Nick. But he's going to turn 27 and he's a content creator. He helps, some of the bigger gaming companies in the world come up with marketing budgets and, kind of does some of what we do with Resource Stock Digest. He helps get these stories out to his pretty broad audience. And he's done very well for himself doing that. But because a lot of his clients are working out of China and Japan, these tariffs are having very real world implications for him and other people, obviously, throughout many different sectors. So as an example, he's got conferences in Japan and he's got clients in China that are scaling back any investment in gaming marketing budgets here in the US because they don't want to pay 248%, right? On top of what they're already paying. So my son was actually saying it might behoove him to go and live in Japan for 3 months, run all the marketing out of Japan. He'll pay for his place here. He'll pay for a place there. He's like, but I'll triple my money than if I just sit here and hope that the Trump administration and the people that be, the powers that be, come to their senses and work something out. Because China should, like I said last week, China wasn't blinking. China's still with hold my deer. We're not blinking. We will do this till the end of it. And by the way, we're going to cut your rare earth supply off while we're at it. So take that, motherfuckers.
Yeah, I mean, a ton to add to that. The real world implications, you're not seeing them in the data and you're seeing in things that are happening in real time. So I was reading a report about like how many container ships came into the port of Los Angeles in the fourth quarter, which is the largest port in the US, and clearly reflective of companies and folks rushing to get stuff into the country before the tariffs come into effect. I read another report yesterday that said, the Canadian government is urging executives of Canadian companies not to even come travel to the United States. And if they do, to take a burner phone with them when they go, in case something happens.
Mind you, these aren't drug dealers in most cases anyway. These are Canadian executives, right?
That's right. And last week I was telling you I had gone to buy my sunflower seeds from a local farmer, and he was saying that these farmers are going to take it on the chin. And I told you that in last week's podcast because they can't pass on the costs because they're beholden to the commodity price. And I know you saw this week that Trump was talking about having to essentially bail out the farmers from his tariff situation, which is so good for America that he has to bail out the farmers. So wrap your head around that. Wrap your head around that circuitous logic, right? So lots of things happening out there across the board, not the least of which are gold, which just put on a top 10 record weekly performance and soared to 3,300, and an S&P that doesn't want to get out of bed. So lots going on out there. Some of it's more of the same, but until we get a clarification or a rectification of this tariff situation, it's Bizarro World squared.
Yeah, it's really, I mean, it's a bizarre world. It is what it is. I wanna outline a bit of what you and I have been saying since 2016. But it's one thing for me to speculate in 2016, or you to speculate in 2016, that we were headed for a great monetary reset, and that we didn't know exactly how it would materialize, but that using the fourth turning as a guide, it looked like that 2026 to 2032 period was going to be a pretty volatile one, and one that lended itself for a very fertile ground as it relates to enabling a global monetary reset. To be clear, we haven't had one of those since, I want to say, Bretton Woods was 1944, if I'm not mistaken. And so what Ray Dalio was talking about on 60 Minutes is what we've been saying, that one of those is coming. It's what people like Martin Armstrong, who I disagree on some things, but he gets a lot of stuff right? And he's been calling for a great monetary reset. And what Ray Dalio basically said is he's not worried about a recession. He's worried about something worse than that. And he talked about how that plays out. He talked about how unsustainable our debt levels are. And so let's be absolutely clear, folks, regardless of who you voted for or how you feel about the political landscape, this administration is increasing the deficit. They are let me say that again for all the Doge fanatics, right? And I was supportive of Doge. I want to find fraud. I want to cut waste. I don't want universities that have a $52 billion endowment to be subsidized by $2 billion of my tax money.
We're going to talk about it.
Yeah, we're going to talk about it. And I'm speaking as the brother of
That's right.
Someone who went to Harvard and graduated from Harvard. But we don't play favorites around here. We just call stuff how it is, right? That's absolute bullshit. It's absolute bullshit that I have to pay for Harvard and to have a $52 billion endowment. And it's also absolute bullshit that my tax dollars go to hollow out the Palestinian people and bomb people indiscriminately around the world. We'll get to that a little bit later on. Back to my rant about Dalio. What stood out to you in that interview outside of that?
Well, I tend to turn on Meet the Press, as I've told you many times on this podcast. Yeah. It's one of the few shows that I do watch, typically standing in the kitchen on Sunday mornings. And I saw that it was Ray, and I took it off mute because then they had on Cory Booker, and I had to put it back on mute. But anyway,
that guy's for 25 hours?
I was just going to say, that guy's got a lot of hot air. So I was like, oh, here's Ray. Let me see. I know what he's going to be talking about, but let me see how he articulates it this time. And so he ran through, exactly what you just said. I'm worried about something worse than a recession, which is obviously a depression, laid out what that looks like. And then he talked about internal U.S. conflicts.
Yep.
And he talked about global conflicts. And those are the
Yep.
three things that the Fourth Turning books lays out very clearly, are the way that this all ends, right? There has to be what is called, the book uses the term ekpyrosis, a final burning down, right? And we don't know if that's going to be a burning down of the financial institutions, or it's going to be a more literal burning down of,
Yeah.
bombs dropping either domestically or internationally. Of course, there's been growing international conflict playing into this fourth turning as we approach this precipice that you were saying, 2026 to 2032. This writing has always been on the wall, right? Like, again, you said we've been talking about this since 2016. Even before that, right? We papered over 2008, right? We cut
Yep.
interest rates till zero. We had QE infinity.
Bailed out
And so
banks.
bailed out banks. And so it's always just been papered over, and you get this continued kicking of the can. What the premise is in the fourth turning is that the problems actually get dealt with, right? They don't get kicked down the road anymore. And it gets very convoluted to see exactly what the specifics are going to be. And that's why there's three different scenarios that I just laid out for you. It's also why, at least for me, I won't speak for you, I've taken the precautions in my life that I've taken. And I've talked about these, and I've written reports about these over time. Again, sitting on 42 acres with multiple wells and gold in the safe, some of which I put on my eyes for you a couple of weeks ago in an episode of this podcast. And it's also the reason I invest the way I do, which I also laid out for you in recent issues of this podcast. Large percentages of cash in my macro long-term portfolio, large percentages of gold. And so we can weather financial storms like we're seeing now. My IRA, I posted on Twitter today, my IRA is up 16% year to date. The S&P is down 10%. Year to date. And so you asked me how Ray laid it out and what stood out to me. What stood out to me is that you're getting executive actions now and literally seeing the institutions fail in real time, financially, in terms of constitutionality, right? With the Supreme Court telling the executive branch to do one thing, the executive branch saying, fuck you, and playing
Every member of the Supreme Court, Republican and Democrats. Let me be absolutely clear about that.
And trying to play it out in the media. And so, gosh, I mean, that's it, So for me, I'm a contrarian. I'm a bear market guy. I've said that a lot. I'm not a perma bear, but I'm more comfortable wearing a bear suit than a bullhorn for sure. And so when I see this stuff start to play out, it doesn't make me happy because there's obviously financial pain and stuff in the world. But
Yeah.
I do get that I told you so feeling, man. Like, we've been telling you so.
Look, I think there's a reason why we both own, land in the country, away from people, surrounded by, cows and surrounded by, not too many neighbors. And I think there's a reason why there's bullets next to your gold and your Bitcoin and everything else that comes along with that. And, I think there's a reason why we have gates around our properties and why we have camera systems and all sorts of security measures in place. Some you can see, some you can't see so much, but there's a reason for all of that, and it's one thing to be a journalist and call this stuff out, and respect to the journalists. We need them more than ever nowadays, real ones, right? But it's another thing to actually be taking the steps and the precautions to make sure that you and your family have safeguards in place. Now, I realize that Nick and I are more fortunate than a lot of people, right? And we've been fortunate in the sense that our hard work has been rewarded pretty handsomely over the last several years. So that gives us more flexibility to do some of these things. But whatever your level of financial security is, folks, you should be taking more precautions. And that's going to be different for different people, depending on where you live. Are you in the city? Are you in the country? Do you trust your neighbors? All sorts of, there's a million and one factors. You're going to have to, do an assessment of your own situation, of your own family situation. But be absolutely clear, folks, that volatility, both financially and volatility just geopolitically, obviously, but societally, is going to perk up over the next several years. And, it doesn't mean the world's going to end, but it does mean it's going to look a whole heck of a lot different. And there's ways to prepare for that. And I encourage people to do so.
Over my shoulder is one of many books, is The Origin of Species, the strongest of which are those that can adapt to changing times, as Mr. Darwin would have told you. And so it also doesn't mean that it's all negative. I was just saying how the portfolio is positive, and I'll make a pivot here to gold. You said that it's going to be increased volatility. Yeah, gold just delivered a top 10 all-time weekly performance, right?
Yeah.
Adding $100 a day at some points, right? And so
Yep.
and we can talk more about gold and gold stocks, but I do got to plug this thing, right? Because what people do look for in times like this are answers, our guidance, our hand holding. And so we're going to do some of that. We're planning this webinar for April 30th. It's a free webinar. We'll run it through Digest Publishing, and you can join. You can submit questions, and we even have a live question and answer session at the end of it. The point is going to be to go through some of your, Gerardo, top gold picks as we get into this gold stock bull market. So those words should come out of my mouth as well. Gold's been in a bull market for a while now. Gold stocks are now starting to break out. Pull up a chart of GDX or GDXJ, and you can see that these gold stocks are starting to break out in a real way. And so if
Yeah.
you're not already positioned, if you're looking to get positioned, or even if you just have questions about all the craziness, we encourage you to check out that webinar later this month, because I think people are clamoring for it, and we have this podcast, of course, but you got to pre-submit questions. So this will be a way to get it out to our broader audience, and hopefully hold their hands in what are certainly some volatile times.
Well said. I'm excited for that webinar. I encourage you all to please write in and send questions. I want to thank you all again. Every week we add to the audience count, right? And the paying subscribers. So thank you all for indulging us and taking, what's an hour of your life every week to listen to my ranting and raving and my childish sense of humor and Nick's wise insights. Let's get into how we're going to make some money off of this. You said gold bull market. You talked about gold. I want to talk about silver a little bit. It's held in really well above that $32 level. We've still yet to see that breakout that we're all waiting for. But in a market where I'm looking up, the Dow is down another 500 points right now, and is off pretty significantly from all-time highs. Silver hasn't made new highs yet, but it hasn't broken down either. It's held up really, really well. And for a long time, silver folks traded as an industrial metal. Every week that passes, I'm more and more convinced that traders and speculators and capital and big money is looking at silver as a precious metal. And that's pretty significant because it's not a huge market, the silver market, and it's not going to take a lot of capital finally being convinced that silver is indeed going to make new highs and trade like a precious metal for it to break 35, then 38, then 42, and go straight to 50. That's me freestyling the technical charts. You want to give us the more informed opinion there, Nick?
I mean, that's it. It really needs to get above the low $33 level, and then get to 35 and go higher. I won't pull up the chart for you, but I'll say what I've been saying and sort of what you just said. It's back to a precious metal as opposed to an industrial metal, and then I've been allocating more to it in the past couple of weeks. In a physical sense and a mining sense. I'll give you a freebie. Sprott's got a new silver ETF out just in the past couple of months. That's a hybrid. Well, what's the ticker? I'm not going to try to get it out of my lips right now, but it holds a fairly large percentage of the Sprott physical silver ETF, and then the rest it holds silver producing companies. And I started buying that a couple of weeks ago, and I think we're already up 7 to 10%. And so I was already in large silver miners, and we're doing okay on that. And now I'm layering in more exposure to silver. So sometimes I don't have to pull up a chart for you and show you that it's bullish. I can just say, I've been buying silver stocks and in physical silver, and have been putting that in the portfolio. And so again, another shameless plug. You can hear us talk about it here on Bizarro World, but if you were on Foundational Profits, you would have gotten the alert to buy that several weeks ago, right? So silver bullish. No other way to say it. It's one of the few things that is, and like you said, well, no, maybe you didn't say it. You said it takes a little bit of money coming in. There's not a lot of high quality individual silver plays, right? It's a lot of byproduct and things like that. So if you're looking for an individual the exploration or development play, you've got to talk to somebody who knows what they're talking about.
Well, and back to the webinar, right? And this is the value in the webinar. One of the picks is going to be my single largest silver position in my personal portfolio, a company that I've wrote significant checks for, that I have significant holdings in. That'll be drilling very, very, very shortly. Company, by the way, that we help finance in PPI, Private Placement Intel, our accredited investor service, at 25 cents. And this was after us doing, I think, what was the equivalent of a 15-cent financing previous to that. Shares today are sitting at $1.05, between $1.05 and $1.10, with the main catalyst still to come, right? And so, again, regardless of where you are on the investing spectrum, whether you like a lot of risk, if you're like me and you're high risk, high reward, and you're comfortable with that, that's great. We have products for you there. Or if you take a more methodical approach and you like more liquidity, Nick has several services that emphasize that. If you're more on the ETF side, Nick, again, does a wonderful job of that. And by the way, he does more than just resource stocks. He does, a broad basket of whatever's making money. Or if you're into crypto and you want to learn that market, it's not my cup of tea, but I'll tell you what, I recently, sat down and had our in-house expert, Chris Curl, literally fly out to Austin and walk me through how to take advantage of this crypto, if you could call it a breakdown, this crypto correction. I'm a contrarian, right? So I'm looking at Bitcoin now, and I finally learned, he walked me through how to buy crypto, how to buy Bitcoin. And so whatever your cup of tea is, folks, there's plenty of services there for you. If we're just not your cup of tea, I don't know why you would listen to us every week, but if we're not your cup of tea, we're happy to recommend you to reputable newsletters and people in the industry that, have been friends or advisors or mentors or people that we've, followed, the Joe Mazumdars of the world, right? The Brent Cooks of the world. There's a lot of great services that do different things than what we do. We take a lot of pride in the educational aspect of what we offer. And we also take a lot of pride, obviously, on making money off of those thoughts and those rantings and those ravings. So hopefully you'll join us for that webinar. And there will be 3 picks. There will be some gold in there. There'll be some silver in there. And got a little surprise 3rd pick that I'm still working on, that some of you have been asking about, that I'll get to a little bit later on in the premium portion of this podcast. I'm not going to give you the pick. I'm just going to tell you why I haven't given you the pick.
Meow.
Meow.
Jerome next or rare earths next? We got to do a rare earth section.
We have to do a rare earth section, right? When we talk about Cold Wars with China, and all of a sudden not being Cold Wars anymore, they're very out in the open, right? China literally telling the U.S., we will fight this till the bitter end. Just Chinese delegates got on TV and called us fucking peasants. They said that the American peasants would soon bow to the knee of 5,000 years of culture and civilization. And the Mexican part of me was like, well, look, motherfucker, we've been around for a while too, right? But I know he was talking to us as American citizens. So look, it's getting spicy out there, right? It's getting spicy and it's getting petty. But they're holding a lot of cards, and one of the main cards is the rare earths card, right? And it's such a misinformed, opaque business and industry because, again, kind of like the silver space and even more so, it's so small. It's such a small market, and there's a difference. I'll give you a basic primer on rare earths. There's 17-ish of them, right? There's light ones. I'll make this simple because I'm a simple guy. There's light ones and there's heavy ones. And the heavy ones are the ones that China really specializes in. The heavy ones are the ones that go into, national security stuff, national defense stuff, like satellites and missile defense systems and fighter jets and, all sorts of bombs and basically, all the important stuff. The light ones are the stuff that are important, but we actually have some of those here in the U.S. We actually, there's a steady supply of those around the world. It's the heavy rare earths that are really in demand, and China knows it, and they outright banned exports on all of that. Basically said, we'll review that when we feel like it. Let's see how long you can go without. So I think the U.S. finally, we went through this in 2010.
Yes.
It was short-lived. I will tell you all, this is more serious. Like I told you last week, that the overall indices weren't out of the woods yet, and that there was more volatility coming, and that the bond market wasn't satisfied yet. And it doesn't help with Trump and his administration teasing the bond market. Trump came out and said, the bond market had a moment, but I took care of it. I fixed it. It's beautiful now. Say Candyman 3 times to the bond market, see what happens. I mean, I'll just leave it there. But Nick, I want to get your take, because you wrote a really good piece in your weekly letter that I just read, talking about rare earths and outlining how you're positioning your subscribers for that.
Yeah, I mean, it's important to just get it out there. Like you said, it's a very opaque industry, and it bubbles to the surface every couple of years, and you get articles about it, some misinformed. But there's real money to be made there. So let me start there. When this happened last time, you mentioned 2010, there was a skirmish in the South China Sea, I believe it was. And China said that they were going to ban the export of rare earths to basically, the Western democracies, right? Japan and the US. And the prices of rare earths and rare earth stocks went up dramatically. Do you remember how much they went up at all, Gerardo?
Yeah, because I was lucky enough to get positioned in a couple of those. And but look, one of the picks that was brought to me by a now close friend and an advisor and mentor to both of us was up some 10,000%. Another one was up some 8,000%. And it all happened quick, folks. And I got to tell you, I'll give you a cautionary tale. This was early in my speculative career. So I cut my teeth I started trading between 2008 and 2010, when the world was falling apart. I had very, very, very little money. I had refinanced the property that we had purchased. I had a little bit of money there. I took out as many loans from friends and family as I possibly could. And I went in there guns blazing, thinking I knew something, right? And fortunately and unfortunately, I started playing with options, and I started playing with leveraged options. So back then, these rare earth companies, you could buy one share for, let's say, 30 cents, but you could buy the equivalent of like 100 of those shares on margin, on credit, essentially. So I was buying options on margin with borrowed money that I didn't have, basically. And I did really well. And this is the fortunate, unfortunate part. I thought I was smart for a second. I thought the stock market was easy. So
Confuse the bull market for brains, as Mr. Rule would say.
Oh, great humbling lesson. Absolutely humbling experience. And I'm glad that it happened to me. So just to make a long story short, I took like $10,000 or $15,000 and turned it into like $300,000-$400,000. Not only did I do that for myself, I did it for a friend of mine that was crazy enough to do it with me. He's like, just you do whatever you want to do. You seem like you know what you're doing. And look, we took some profits. We traveled a bit. We bought a home. So we did some stuff with it, but then it became a round trip, because that skirmish was very short-lived. So, all the brains that I thought I had, I realized was just good timing and fortuitous timing and a whole lot of luck. And so that was a round trip. Those 8,000% gains turned right back around. And some of those companies are non-existent now. Some of those companies are still at it here 15 years later, still haven't produced a rare earth. Still haven't been able to figure out the metallurgy, meaning the extraction of the metal. And so that tells you what a tricky industry it is. And it tells you why China controls 90% or 90+% of the refining of those, right?
Yeah, the Western world was content, and it's also a very dirty process with a lot of carcinogenic byproducts and potentially radioactive byproducts, things like that, right? That you've got to deal with, and the U.S. didn't want to deal with that, so we said, I dropped my little squeeze toy. We said, China, go ahead, you can process all these rare earths for us, and so you said. That skirmish went away very quickly, and it was a round trip on the stocks, 10,000% back down. But what happened was the skirmish went away really quickly, but the underlying problem did not go away very quickly. As you just said, there's companies still at it. We were content to just continue to rely on China. And now we're back to where we were. And there's been quasi skirmishes over the past couple of years. It was probably only a year or two ago we had to brush up on gallium and germanium, and I'm sure we were talking about it in this podcast, because every couple of years China says we're going to ban the rare earths. You mentioned a mentor and friend. who was in the space then. I mean, it's a very small space. You guys, as I understand it, we're essentially involved in, I'll make up a number, probably 75% of the rare earth companies that were out there, right? So
that is a fact. And he
I
was
was
responsible for financing, I think, over 90% of those from like a very early stage companies that he helped finance at 12, 15 cents that eventually went on to be $17, $18. So
And so
yeah,
I asked him this week, I was like, is this real? And he was like, oh yeah, it's real. He's like, the State Department's been, investing in projects, trying to figure this thing out. I know for a fact that the government's been, has a critical metals consortium and is looking to fund, some of these projects. And so you asked me about the thing I wrote today. Well, I'm not going to give you the names of the stocks for free, but I'll give you one. There's MP Materials, and earlier you did a good job of differentiating between light and heavy rare earths. MP Materials doesn't dabble much in the heavy, and they still export a lot of stuff for processing. So there's only one company, big board listed in the U.S., that has a mill and has procured the monzonite sands, which is one of the sources you can procure these rare earths from. It made a deal last year to get a high quality source of those. And is already cracking and separating them with an NYSE listing. So, I gave an interview last week. I was talking about rare earths.
yep.
I mentioned that company. The news broke over the weekend. That stock's up, 20 some percent since last week. And then the other company I've been talking about is a company that's setting up a recycling chain in your state of Tejas that's going to take
Yes,
computer hard drives and take the magnets out of the hard drive, and has a high pressure chamber that they use to extract them. And this isn't black box stuff, because I don't do black box stuff. This is already up and running in Europe. They're just bringing it to Texas. That stock, up 10 to 15% in the past week. And they just did a pre-feasibility study last year, expecting to break ground next year in Texas. And I do believe they're going to get State Department or DOE or DD funding, right? So that's how you play this. And then the last thing is, don't forget to sell, right? Because, as you just said, it was a round trip. The flashes in the pan like this can come and go, and you got to be positioned, and you've got to be willing to get positioned, and then you got to be willing to take profits. So this is a very real situation. It's tangible for me. Like when I think about the tariffs and 100%, 200%, 500%, no you. It's like, well, what does that do for me? Like, I can't read a headline about that and then go position, right? Other than hold cash and gold. But when I see something like specific and concrete, like this rare earths thing, there's equities you can run to generate alpha in the market. And that's definitely what we're doing in Hodge Family Office, and sniff that out pretty good, because we just started buying that one stock in January, and feel pretty good about the rare earths positioning. It has to go the other way. That's the last thing I'll say.
Yes, we have no
still,
choice in this.
Yeah, still 90% dependent on China for the processing, at least. And so something's got to give, man. You talk about the fourth turning and the things that happen and the responses to it. The responses to it are you actually fucking take action. You don't kick the can down the road for the next 10 years, right? And that's where we're getting to.
That's absolutely correct. Copper's held in beautifully. I know I want to get to the premium portion of the podcast and the episode, but how's Copper looking to you? It looks fantastic to me. The setup is good. It's been like climbing stairs. That chart to me looks good despite a recent correction. And this amount, this within the backdrop of Jerome saying, yeah, we might be headed to a recession. Jamie Dimon saying recession is now on the table. Like these tariffs are really not the way to go. So people are starting to price in a recession. And despite that, copper's holding in there pretty damn good to me.
Well, it lost $1, right? It went from 5 to 4 a couple of weeks ago, and then caught itself and bounced right back up off 4. So it has been looking good since it bounced up off that $4 level. You could say the market has concerns about recession and things like that. But again, not just like rare earths, but similar to rare earths, you have a supply-demand scenario that isn't going to be eradicated no matter what happens with the tariff situation. So it might be a little bit longer term than rare earths. I just said, rare earths could be a flash in the pan, it could come and go. But copper is definitely set up for a more sustained bull market. And the fact that it caught itself at 4 and wants to go back up, given all the uncertainty, tells me that, the underlying supply-demand fundamentals are okay.
Let's talk Taxes, Harvard, and government cheese.
Let's do it.
Right now, live in a country where 9 Supreme Court justices can tell the administration that they must comply with a Supreme Court order. And again, Republicans and Democrats, folks, Republican appointed, Trump appointed Republicans came down and said, what you're doing is illegal as it relates to snatching people off the streets and sending them to foreign countries to maximum security prisons without any due process. And you must bring these people back and give them due process. If they committed a crime, cool, charge them, prosecute them. This is America, right? And the Trump administration said, nah, how about I just don't listen to the Supreme Court justices? So my question, as I sit here, and I won't tell you how much I got to pay in taxes this year, folks, first world problems. It's a lot for me.
Or do you with the IRS? No.
This is where I'm going, and I got to choose my words carefully because these motherfuckers might come and snatch my little ass up, right? So if Trump doesn't have to listen to 9 Supreme Court justices, this is the highest court in the land. There is no other, there's no, alien court that we go to above the Supreme Court justices. Then I go back to, why am I giving all this money to a government that's enacting policies, most of which I'm not agreeing with right now? And a lot that's being wasted on both sides, right? We were doing 20 million Muppet Baby shows overseas. That was under the Biden administration. I guarantee you, the hundreds of billions of dollars in contracts that are going to Elon and his team, maybe justifiably so. I think he's brilliant, but I don't agree with a lot of his approach. I don't think he was the most calculated person to come in and overdo this fraud and waste. And, he went from saying, we're going to find $1.5 trillion or $2 trillion to, we feel pretty confident we can find 150 billion. It's a big difference between those numbers, people. So again, why should I be inspired to send that check in?
You shouldn't be. Taxation without representation is tyranny, Gerardo.
Tyranny and theft.
If we were a taxpayers union, we would be going on strike, i.e. not paying taxes. And I think that's where a lot of people are in the state of the country right now, right?
Yep.
So, you could talk about a lot of things. I haven't dug too deeply into the Harvard stuff, but it did strike me not well that they just have $9 billion to be taken away from the federal government. Like, why is this private institution getting $9 billion from the federal government to begin with? Was one of the thoughts that I had.
It's got a $52 billion endowment, folks. It's not like, listen, I am a firm believer in institutions of learning and higher education.
Like you said, your brother went to Harvard. Yeah,
absolutely, no doubt about it. But I don't want to fund it.
No,
not if the university has a $52 billion endowment. Now, if you tell me that some of my tax dollars might go to the local community college to make courses free for people that want to learn and want maybe a vocation and don't want to go the university route or can't. If you tell me that you're going to offer some free courses and programs to make our community safer and our workforce more educated, I'm all for kicking some tax dollars towards that. I don't want it to go to Larry Summers checking out 18 and 19 and 20-year-olds over the summer. Like, that ain't where I want to send my money.
I need to choose my words wisely as well, because I'm obviously supportive of higher education and I went to a private university, but I don't believe that they need to be getting public funds, right? You mentioned the endowment, which they get tax preferential treatment for. And I'm not just picking on Harvard here. I'm picking on private institutions,
all
right?
of them.
They don't pay property taxes on some of their buildings. You try not paying property taxes, Gerardo. Here in Washington, we're going to jack up the property taxes again because we have a $12 billion deficit that the last governor ran up over his tenure, and he came in with not a deficit, right? So I already pay, 5 figures in property taxes, and now we want to jack those up. I can't say, oh no, I'm just not going to pay property taxes like a Harvard of the world can. So I'm not taking Trump's side, but it does bring to light something that, it doesn't sit right with me, and I don't think sits right with a lot of people. And I'll give you one more, how we get this preferential treatment of institutions, and this ties to the fourth turning. So here in Washington State, I just told you we had a $12 billion deficit. They're trying to figure it out. The Democrats just proposed their budget. We have a new Democratic governor named Bob Ferguson. He says no new taxes. We'll see how long he sticks to that. He seems pretty serious about it. But anyway, the Democrat legislature came up with these new line items, right, to increase the tax revenue. More capital gains, obviously, taxes
No
in
way.
a state where the
Fuckers.
capital gains are supposed to not have taxes on them. Only for people with more than $1 million, though, now. So we're really going up the ladder. And then more taxes on businesses that generate more than X amount of dollars in revenue. But immediately, before the bill gets voted on, before it gets signed into law, who gets an exemption from the increased taxes? Boeing gets an exemption from the increased taxes. Why does Boeing get an exemption from the increased taxes in the Democrat proposed bill? If we all need to pull our weight and you need to tax capital gains and other businesses, why does this one business get an exemption? Why does Harvard get $9 billion, right? This is where Ben Hunt would say, burn it the fuck down. The federal government was never supposed to be funding private institutions. They're supposed to be providing for the common defense, right? If you're going to pass a bill in an entire state where you're going to tax businesses, why are you going to cherry pick ones from inception that aren't going to have to pay the increased taxes? We would call this, in common man terms, fucking bullshit, Gerardo. Like they got to get their act together, man.
I'll take your Boeing example, and I'll take institutions, not just Harvard, any private institution, right? And I'll raise you a church. Why are churches completely tax exempt?
I don't know. I would start one.
Somebody asked me this a year ago, and I just don't have the moral compass to fucking do something like that. But people. Anyhow,
It's crazy, man.
Anything else you want to get off your chest before my head explodes here?
No,
put my glasses back on so I don't curse as much.
That's pretty good on taxes, Harvard and government cheese. We'll see if we get our tax cuts. Anyway, we'll see. On to the premium portion of this podcast.
Let's get to it. Thank y'all, everybody, for joining us for the first part. It's been a blast as always. Let's get to the premium portion of the podcast. I am Gerardo Del Real, along with my partner, Mr. Nick Hodge. This was the 313th episode of our weekly therapy session that we call Investing in Bizarro World. If either Nick or I come up missing, it is one of the alphabet agency folks. Come get us, all right? Y'all have a great week. Take care of each other.
See ya.